morning. It is Tuesday, March 4th. It's a one-shot deal this week. You will be getting me for one shot this week, okay? This is it. So if you're going to listen to one show, listen to the entire show because we are in the middle. You know, I've been telling people we're going to go over a lot. We're going to go over the stock market, what to do. We're going to go over why all of this is going down, which shouldn't be a shock to anybody. We're going to go over strategies because you should have a strategy, whether it's a portfolio strategy, stock strategy. It's nice to have risk tolerance when the market's going up, but this is the test. Are you losing sleep? Are you worried? Are your knees shaking a little? We'll go over some strategies to try and help you maybe sleep at night. Pick the stocks in your portfolio. Understand it. We're going to go over Tesla. Tesla's a shit show. Does it mean just get out? What I've learned in the past. We're going to go over crypto. Is the bro bubble popping? We will go over what's called beta. Okay. There are, somebody released, I think it was, I forget, we'll open up that article, but 9 low beta stocks that should guide you through this portfolio. And we're going to go over, by the way, the correction deniers scan in TrendSpider. So we can find one. There are some stocks that are going up. I mean, look at OKTA and Alpha Pick with good earnings up. Look at C Limited. Which is a Chinese software company. It is not a shipping company. Up. We'll look at Broadcom, MRVL, CRDO. They all report this week in the chips. Cybersecurity, CrowdStrike, and Zscaler, they report. And for the paid subscribers, I am going to go over the core portfolio, what I see in each stock, which ones may offer opportunities, which ones don't. Because if you didn't know, the core portfolio, just so you're aware, it is still year-to-date beating SPY, okay? The core portfolio year-to-date is up 2%. We're in March 4th. It is up 2%. So I'll go over that entire portfolio for you. But let's talk about where we're at with the markets. I've been telling you for the last month or two that the weekly and monthly charts were technically extended. And the good news to push us up just was not there. Earnings were needed to push us up. What did we see through earnings season? Well, great earnings, but you didn't see great guidance. You saw instability. And even good news on earnings weren't pushing the stocks up because the guidance was just okay. Friday's job report, I pointed out last week that this week's job report on Friday could be catastrophic. Why? Government layoffs. They may just be hitting. There is not an economy that's going to support a huge government layoff when you have that many. And it's not just the people on the payroll of the government. It is the contractors of the government. So am I expecting this to continue? Well, let's look. Let's look. Right here's the 4-hour. Okay, the 4-hour algorithm got you out of Qs on February 25th. Where did it get you out? 522. Where you at right now? 493. If you don't have the 4-hour algorithm, why not? Because if you are losing sleep over this market, the 4-hour algorithm provides you protection because it tells you, it takes emotion out of this. It tells you when to get in and when to get out. And if you are that type of person who wants to get in and out, then this is a strategy for you. It's all about having strategies. So if you didn't get out now and you don't have the 4-hour algorithm, what are we looking at? Well, you see that green line right there? That is part of a weekly trend. Okay, you see this yellow line right there? We'll go over the weekly chart on this. But right now I'm going to focus on the short term. The short term doesn't have you in. Should you be buying this? No. When markets go down, they don't go down on a slide. They go down on an escalator. You know, it has stairs. So you're going to see little stair steps. You're going to see sideways trade. You may even see a step up. It's like hiking. You're going to go up a mountain. You don't go straight up the mountain. Sometimes you go what's called switchbacks. You go left, you go right. Sometimes you even go down before you start going up. So markets don't act in a straight line. They react like this. So what are we looking at? We're looking at a stock sell-off. I mean, you are literally looking at index futures lower after the sell-off. Tariffs. tariffs. What's the good news in the market? Is Trump throwing out there inflation's going down? No. Is Trump throwing out there that valuations on the S&P aren't extended? They are. Is Trump throwing out there that the Fed is going to cut rates? He's trying to. He's not in charge. But rate cuts, Jerome Powell said, we're data driven. Well, what's the data telling us? It's telling us that the job market may be soft. It's telling us that inflation is there. Those are the only two mandates. And right now, the only thing that the Fed has to do is actually reduce rates. And that may spur something, but it might be temporary because inflation is still out there. Higher earnings, but guidance down, that's bad. So again, you've got fear in the market. You've got fear in the market. And the Atlanta Fed GDP is now predicting GDP is in the red for this first quarter. Okay, that's not good. That puts in stagflation, inflation. It puts a lot of pressure on the market because we've seen it. Sentiment and momentum is going to be key in this market. So let's take a look at some of these. We're going to go over VOO right now because some people I track to QQQ. It's the NASDAQ 100. Some people do the S&P 500. Where did the S&P 500 have you out in the 4-hour algorithm? It's right here, right at about 553. Where are you trading right now? 533. Simple as that. Take emotion out of the market. Have a strategy. This is a technical strategy. And if you want this strategy, go over to Linktree. The link is down below, linktr.ee/daily stock pick. It is more important than ever to have a strategy that you know works. And when you back test this strategy, it works. Okay, you'll get to this. Sign up. You don't get the 4-hour algorithm until you sign up for a yearly plan. I don't like these 2-week trials because I don't think that you can learn how to use this software in 2 weeks. But if you want to take it for a test drive, if you want to try some of these little strategies, you absolutely can. Okay, so TrendSpider is a key. Right here, VOO, it had you out with a nice little 1% gain. 18 positions over 24 months, you win 67% of the time. I will tell you, I use it to enter. I don't use it to exit. I will trim some when I see weakness. We'll go over kind of the trimming strategy that I have. But when you look at VOO, it was very clear that we had lost confirmation on that 9-day. We're now below the 200-day. What happens when we get under the 200-day? Typically, we have typically gone up. But this has been through good news. Name something good in the market. So it's hard. It's hard. And if you're losing sleep, this is when risk tolerance is absolutely tested. But the key is having a strategy. Now let's go look at QQQ for the weekly. Since I track on QQQ, I am so much more attuned to that one than I am VOO. But I own both. Okay? Here is QQQ. The 2021-2022 highs were support. See where it pulled back almost to that? You wanted to buy in this weakness. When it pulled back here, you wanted to buy in July 2024. You wanted to buy into this weakness. Are you buying on the way up? It's fine to buy on the way up. You want to buy into weakness. Now we saw that green line on the 4-hour. That is simply anchoring a trend line at COVID. And then you look at it and you can see it provides some support here in June 2022. It provides some resistance here in 2022, and it provides some support here in October 2023. And you can see the continued support. So that trend line with previous all-time highs where you can see it provided some resistance right here at 448. If you get down on the Qs to 448, that's an additional 9% loss. Now, can you stomach that? Because look at the oscillator, look at the MACD. It's still super high. It hasn't come, it is now 12 points above the oscillator. When it was below the oscillator, you absolutely wanted to start adding. Now, this is for long term. This isn't for trading. A weekly candle isn't going to give you a trading strategy. A monthly candle will provide you a better look at long term. Do you even notice a drop in a monthly? No. And look at how high the MACD is. Look at how high the RSI is. Okay, all indicators are indicating that we have another downturn coming. That maybe Q1 is just bad. Maybe March is bad. Well, let's take a look at the seasonality. Okay, we're not going to do the week of the year because you can see at this week, let's not do the last 4 years. Let's go back to 2006. Okay, let's go back to 2006. That's 19 years. Okay, this week, 50%. Next week, 53%. Then you get to the last 2 weeks in March, and they are super, super positive. Okay, that's the last 2 weeks of the quarter. Maybe that's the way to buy things is today you can buy them so that in the last 2 weeks of the quarter, you go up. Maybe you use TQQQ as a leverage strategy. But again, make sure you have a strategy. And TrendSpider provides you all of the tools to get that strategy. And so I don't see the reason to panic right now. But if you are panicking, there is nothing that anybody on the internet, no douchebag can tell you to stop you from panicking. You're panicking because you don't have a strategy. You had a strategy on the way up, which was, I'm just going to buy and hope that it goes up. But if you didn't have a strategy for the way down, which meant, hey, I've got cash on the sidelines and I can buy when it becomes time. And nobody's going to tell you when it becomes time. But maybe the 4-hour algorithm is that one that when it comes time. If you bought it for 525, doesn't feel good. But you know what? I bet 5 years from now, that's going to feel good. And so that's the time frame. That's what you're looking at. The key is to have a strategy, not just in your portfolio, which is, hey, I want to buy stocks today and have them go up tomorrow. If you're holding more than 10 stocks, this is the time to trim. Okay, this is the time to find which stocks you actually like. Because if you have more than 10 stocks and ETFs and a full-time job, that's a lot to manage. Trim it. And you want to trim into strength. You want to come up with a strategy so the next time we get a nice little bump, you can sell into that strength. My biggest position in my portfolio is Apple. And here's a great TrendSpider strategy that they share with you. Okay, the strategy enters on a 30-minute close above volume weighted average price when the 20-day EMA is above the 50 EMA. It exits plus 3% or minus 3%. Okay, so it's a trading strategy. It takes 3% gain for a 1% chance in loss. 10,000 candles back tested nearly doubles the return of buy and hold with a 2.88 return risk ratio. And you can import it directly into your system. I like it. I like it. One of the things I'm going to do later, I think it's later, is show you the correction deniers scan that I like. In fact, we're just going to talk about this because we're going to talk about weeks like this, the past couple of weeks, are why you you have to know your portfolio, where your risk tolerance is, because again, in a bull market, everybody's risk tolerance is great. Oh shit, I can just buy it and it'll continue to go up. Well, maybe it doesn't go up. Maybe some of your stocks just continue to go down. But that's the key is during this week, your risk tolerance can be absolutely determined if your entire portfolio is down 20% in a month. Okay? Then you know whether you have a good portfolio or not. If you still sleep at night, you have a good portfolio for yourself. Doesn't mean you're going to win, but if you can sleep at night because your strategy is sound and you feel like you've got a good portfolio and it's down 20%, you're fine. Your risk tolerance is there. But if you're losing sleep at night, it's time to rebalance, time to get serious. A couple of tips on how I manage things. If you panic sell, that's not a strategy. So if you wake up in the morning and see the market's down 2-3% and you're like, oh shit, I'm going to get out, that's not a strategy. If you just buy a stock because it's on its way higher and you don't tell yourself, oh, here's my bottom portion and here's my top sell, or, where am I going to sell? Am I going to wait 5 years? AVGO is a great example of this. Okay. I bought last March and I have this marked right here. I bought it Did I time it correctly? No. You can see I was buying during strategic periods. It's during the 4-hour algorithm. I haven't added to this one because I've seen the volatility. Should I have added to it? Absolutely. Am I selling it now? No, it's weakness, but I want to hold for 1 year. It's a long-term position. I don't want to pay, income taxes on this. I want to pay capital gains taxes. That's the strategy. So I'm going to hold it until at least March 18th when I bought it. And that first lot, I will sell. Now, that first lot, I will start to trim and sell if it's into weakness. Okay? I will start to trim and sell, but I will absolutely buy it back. This is the strategy that I have. And that's a good example. They report this week. I may continue to see downside because on this weekly candle, you can see sometimes we go onto that 50-day, but that 50-day has provided some support and that's still down at 170. But am I panic selling? No, it's a good company with good products, with good revenues and good management. I like it. And it's chips. Is it expensive? Absolutely, it's expensive. And chips have not done well. Wall Street thinks that this is a $246 stock. Okay? The quant has had it as a hold for a very long time. And the only knock against it is the valuation. That's it. And you can see for the entire 1 year, it's been a hold. And the stock, while it was 120, was a hold. And it's the valuation. That's the only thing that's holding this down. But that's a strategy. Again, the Apple strategy's right here. But that's a strategy. What I've found helpful in times like this is we can go and look at this, okay? I put in the newsletter last week, Correction Deniers by TrendSpider, okay? This is a strategy that looks for stocks that are going up, okay, while the market's going down. And we can look at this. It pulled up Yum Brands. We can look at this in the 4-hour. You know what? I'm going to do it up here. We're going to look at correction deniers up here. I was going to change it to look at the core portfolio, but we're just going to put it up there and we're going to go to the 4-hour algorithm because this is how you use TrendSpider. Use the scan of correction deniers that tells you which stocks in the S&P or in the New York Stock Exchange are going up. Look at that. Yum Brands, the 4-hour algorithm had you in here at 126. While your portfolio is going down, this one has strength. EVTC. This one just got you in here on February 27th at 36. Where are you trading right now? 37.38. That's almost a 10% move after an earnings gap up. And you can go into Seeking Alpha and look at what this company does. I don't know. VTR, again, Ventus. It's got a trend reversal, correction deniers. I use things like this, and look, Eli Lilly is in our core portfolio. And I've told you, it's gone through earnings. It's got you in here at 764, and it still shows strength. So the first tip is what I've liked to do is in the short term, if you are an active trader, okay, if you're worried about your portfolio going down, try and find stocks that are going up in a down market. Get some greens in your portfolio. It may make you feel better. That's about all it will, because if you are in the Mag 7 like I am, it has been a tough year. And there is no way I can change on a dime and get out of $1 million positions without paying a tremendous amount in taxes. I can't change on a dime. If you've got a $10,000 portfolio, you can do those kind of changes, but I can't. So what I've found is managing my portfolio, I need some greens. And when I need some greens, I'm going to go in there and I'm going to see, can I trade on a 1-hour candle? Can I trade on a 4-hour? Can I do a 2-week swing? Can I trade? Can I do, something that will make me money, something that will make me feel good while the rest of my portfolio goes down? That's the first thing. Okay. The second thing, for medium-term stocks, okay, and by the way, there is a huge list of correction deniers here. PSTL, which I don't even know, Postal Realty, MDT, Medtronic, Otis, elevators, freaking elevators, okay, Stag Industrial. I have no idea what these guys do, but you can research all of these. Look at these upward reversals. TSN, You can see all of these. This is Tyson Foods. The algorithm had you in here at 55. You're trading at 61 through earnings. And you're about to get the golden cross. Now, would I invest in this one? If I needed a win, this one makes over 24 months, it makes you 9.2% versus buying and holding loses you 0.6%. Okay, it's changed direction. Look at the weekly. It's changed direction. So you want to find those short-term wins. Now, we're going to go back here to the core investments because this is going to be where you're going to look at this one. Because we can look at medium-term stocks, okay? Something like for me, most of these are long-term stocks. Something like Shopify, okay? This is one that I got out of. I didn't get back into. But medium-term, this one, the algorithm got you out. So for medium-term stocks, go and look at a weekly chart. And now, does this one show on a weekly chart? Does it show some strength or resistance? In my mind, this is a coin flip. It does show some weakness here for the past 2 weeks. Do you want to get out of this? Well, the MACD is a little bit high. The last couple of times that it's been up this high, it's gone down. So if you've got profits in this one, and this is a medium-term position holding, trim it. Use your moving averages. Okay, look at the 50-day. It's still positive. Your 200's kind of going sideways. Your 9-day has started to turn down. Your 21-day. Use moving averages. Use the indicators. Then decide if you're okay selling into weakness or wait for an inevitable bounce. And there are many bounces in stocks like this where you can see this one right into earnings where it got you in at 81 and it got you out here with a 31% gain. There are many bounces. I would not sell until it got under that 200-day on this 4-hour or on a daily, okay, for a medium-term stock. Now, for your long-term stocks, you've identified these that you want to hold for 5 years. The 4-hour provides me an entry, okay? This is Apple. This is one that I just buy and hold in my portfolio and I trim it. I've got such gains on this, thousands and thousands % gain, not just thousands of dollars, thousands % gain. So for this one, I would either look at a weekly and you can see I have identified on a weekly a range where you had resistance right here at about $200 where it poked up and then it popped down. And the high is about 260 where I sold in December. And you can see the MACD's resetting. Is this one expensive? Absolutely, it's expensive. Go and look up the fundamentals on this one. But people are dumping this one like there's no tomorrow. I'm not dumping this one. I am looking to add more. I like this one in the long term. It's a personal choice. There's no right or wrong on this. The only one that's going to tell you right or wrong, it's the market, not a person. It's the market. And if somebody gets the call right, you can flip a coin whether I'm right or wrong. Maybe I'm wrong, but I feel comfortable with it. And if I want to even look further out, I will go to a monthly chart. And you can see I've even highlighted where I have pulled back 60% on this, 42%, 38%. Then you had COVID. And are we still in an upward trend? Yes. So when I'm managing my positions, that's what I'm doing. I gave you the short term, the medium term, and the long term. There is no exact science. The rules you make up. Okay? There is no best practices in times like this. Hedge fund managers panic just like you. Everybody else panics just like you. You know who doesn't panic? People with a strategy and a plan. And typically, hedge fund managers, you don't see them panicking. You don't see Buffett running out here. And, he was a seller for the last 3 quarters. Did he time the market? No. Did he make a profit? Absolutely. Does he have more cash on the sidelines? Yep. Is he buying now? We'll find out in the next 13F that he files. But managing your portfolio with a strategy is more than just, hey, I'm going to listen to this douche on the internet to tell me when to buy and sell. If you want that type of portfolio, it's Alpha Picks. And Alpha Picks does this for you. The portfolio return, we can see 1 month, horrible. 3 months, even worse. 6 months, better than the S&P. 1 year, it's less than the S&P. Year to date, horrible. Okay? But Steve Kress has addressed this. And he's addressed it with, hey, these are still very good stocks fundamentally, but momentum has a way of taking stocks that are way up, even if they are still good fundamentally, and bringing them down. And a great example is NVIDIA. NVIDIA is down year to date 15%. And they had one of the best quarters in history. And the PEG ratio is next to nothing. They are growing like there is no tomorrow. And the market is taking it down. It's momentum. It's all momentum. Is it expensive? Not really. Not when you look at the growth. But if you don't believe the growth, it is expensive. But when you go over here and you chart this, and we're just going to look at metrics, okay? We're going to look at valuation. We're going to look at the PE, the historical PE of NVIDIA. And we're going to go out 5 years. That's cheap. Look at the last time it was here, was 2022. And we can go and look at the NVIDIA chart, and we can look at where NVIDIA was in 2022. Let's go and look at a weekly chart, and we'll go back to 2022. That was here. And it was trading for $12. You're trading at $110. Does that mean that this one's going to automatically go up and just soar? No. The market determines the price. But this one, Wall Street, thinks that it's a $172 stock. And even after the earnings, they brought their price target up. The market has brought it down. So even the best strategies sometimes just run into, alpha picks. I have no doubt in my mind that those stocks are on discount sale right now. And we'll go over one in a little bit because they just reported OKTA. But I have no doubt that they are on sale right now. One that I believe is on sale, but it's going to get taken down more, is Tesla. And I do believe that this one is on sale. The China-made EV sales dropped sharply, 49%. Tesla's going to do shitty. And it's going to do shitty because Elon insists on being involved with the government. So for me here, Tesla, is it a buy? No. Am I selling the stock that I had? No. You have to have a plan. My plan is buy and hold. I made this mistake. Now, do I have a ton of Tesla? No, I don't even have 1% of my portfolio overall in Tesla. I am in XLY, which is, by the way, one of the worst. If we look at market data and we look at year to date, XLY is second to worst. XLK is the worst. Those are the two biggest ETFs that I have in my portfolio. And they are the worst year to date. The best, healthcare, up 8% year to date. So it is not created equally. If your portfolio is up year to date, you are most likely focused on one of these other categories. And you're doing fine. And maybe the past few days feels horrible. But again, strategy. And Tesla, in my mind, just presents an opportunity. And will I buy? Absolutely. When am I going to buy? When the 4-hour algorithm tells me to buy. And I will add 1% into my portfolio at a certain point in time in a strategic manner. Doesn't make you, my strategy should not be yours. But here's the 4-hour algorithm. It makes you, over the last 24.7 months, 148%, including this nice little 60% gain during the election. It got you out at 330. You're now trading at 272. Okay? Buying and holding makes you 43% over the last 24 months. I am looking to buy and hold. I have made this mistake with this stock before, and I do believe that over the long term, this one is a big gainer. So news like this doesn't worry me for my current position because it's small enough in my portfolio that I'm fine with it. Okay, crypto. This is why you don't hold more than 1% in your portfolio. Bitcoin's down another 6%. It has wiped out all of the gains since the election. Okay, since the strategic reserve was announced, wiped out everything. This is why you don't hold a huge amount. Now, while it's going up, you add to it. Maybe it becomes 5% of your portfolio. But as it starts to go down, you whittle it down so that it's now 1% of your portfolio. And all of those 1% to 5%, it's all gains. It's all gains. But you have to get into a buy and hold mentality with some of like this. And you want to make sure that size matters. Okay? The bro bubble is popping. Again, it's popping. You can see Meta, Palantir, SPY, QQQ, Bitcoin. It's the bro bubble. The VWAP for Tesla was 371. That fell in the first week of February. So we're down below. These are opportunities, but you have to identify the opportunities. And no douche on the internet is going to tell you, oh my God, I'm so comfortable in this. You have to know what you're buying. You have to know it. So do the research, understand what you're buying. Now here is from, 9 low beta stocks. And this gives you a guide as to what beta is. Stocks with a beta greater than 1 are likely to have return movements that are more volatile than those of the overall market. So beta is an important thing. If you can't stand volatility, then don't get into these stocks. Okay, there's 9 stocks with low beta. This article leads you in it. And if you don't have, I have told you about Alpha Picks. I have guided you through Seeking Alpha and TrendSpider. There is a Gary bundle, and it is TrendSpider. First, you get TrendSpider because you need charts. You need alerts. You have a full-time job. You want to get alerts, when to get in and when to get out. Take emotion out of it. But then you want to be able to do the research, and that's where Seeking Alpha comes in, and that's where this bundle comes in. You save $159. You get premium, which I just showed you. You can chart with. You can look at the quant rating of the stocks and ETFs that you own. It will rate your portfolio. It will give you news on your portfolio. And then Alpha Picks, which is a data-driven portfolio. We just got one yesterday. We just got a pick yesterday. And it's one that I've been screaming about that you should be holding because it's a strong buy in the quant, a financial that has done tremendously well in my portfolio. It is one of 3 financial stocks that I've held, and they finally got onto it. And I was trading at about 30. It's now at 70. And it's just being added to the Alpha Picks portfolio because they believe it's got more room to run. And that's what you want in a stock. Good quality stock with good products, with good management, with good profits, and one that you feel comfortable with the returns on. And the volatility may be there. But overall, if you're picking good stocks with the quant rating beats the SPY over time. So again, low volatility, and get the research in. Now, an alpha pick that, like I was just telling you, OKTA, they killed it. It's up 15% in pre-market. 15%. So not all stocks are created equal. Look at how you use the quant. Okay, the quant is a strong buy. It's been a strong buy ever since it was trading at 84 back here. It's now trading at 100 in pre-market. Is that a lot? Let's see what Wall Street says it's worth. They say it's worth 112. That's still a 10% up move from 100. So if you get it at 100 and it gets to 112, have they chased it up? They've chased it down. They've chased it down. Wait 3 days. If you're not in this stock, or if you own it through the Alpha Picks, what you can do is add when it becomes a winner. Okay? One of the things that I do is when I see a stock start to take off in Alpha Picks, I have an Alpha Picks watch list right here, and I have alerts on these stocks. When I see them start to turn around, I can add them in the 4-hour algorithm. Okay? And I've said this before. I said this about OKTA. Hey, at 72, that looked like great support right there. And you know what? You had a gap up here all the way up to 95. Well, it filled it and it pulled back. Okay, at 9.62%, that's where the algorithm got you out. Now it dropped down here. Would I have expected a 15% move? No. But if I'm adding at $100, where am I looking to add to? Right there? Well, it's right. The 200 days right at 117. And that typically has been used in a lot of stocks as a resistance level. So not all stocks are going down. Another one that's going up is C Limited. This one was up by 10%, I think earlier. It's a strong buy in the quant. And it has been a strong buy in the quant for a while. It just turned last night at $130. It's trading at $130 right now. Okay, the valuation, a little stretched. The PEG ratio, perfectly fine. The revisions, they've been mixed at best. But again, it's a strong buy from Wall Street with a price target of 133. This is just cursory. One of the other things you can do with Seeking Alpha is analyze with AI. It gives you an analyst report. And this was just done after their earnings on 3/4 at 5:11 a.m. So you've got an analyst that sleeps, that doesn't sleep, I should say, and goes through all of this for you. So again, use the tools that you have. Now, earnings this week in cyber. Tonight we have CrowdStrike and in chips. We have AVGO, which is Broadcom. I talked about that one on Thursday the 6th. We have MRVL on Wednesday the 5th. And tonight we have CRDO. And CRDO is the number, just putting it out there, if you don't have Seeking Alpha, it was rated the number one stock of 2024 by Steve Kress, or 2025. And you're getting it at a discount before their earnings. Do I think you should buy this? I bought this way up here at 77, 76. It's at 50 right now. Did I sell when the algorithm told me to go out? No, because the strategy was to buy this when the algorithm told me at 77, buy it at 71, and I will continue to add throughout this year because this is the number one stock. If we go over and look at it in Seeking Alpha, we'll see it. It is still a strong buy. The only thing that has dinged it is the profitability. And if we look at the quant rating, it has been a D in valuation and profitability. Okay, and that's the only one. Now, what are we expecting from the earnings? Go over here to Earnings Hub, and you can see we're expecting 18 cents per share. They reported 7 cents per share. So it's an expanded anticipation. Huge. 166 million in revenue last time, 120 million in revenue this time. Big expectations. Big expectations. They are going to need to beat and guide higher. If we look at a weekly on this one, it is still stretched. Okay, it is not even down at the 200-day. I will be looking to add this on the 4-hour algorithm. That's my strategy. Have a strategy when it comes to this stuff. Okay, it's the top pick. I will hold this through 2025. So am I worried about losing 40, 50%? No, my size matters. It's still not 1% in my portfolio. Even though I've started to add these top 2025 picks, none of them are more than 1% in my portfolio. Okay, I will add to the winners when they start winning. And that's what I'm doing. I'm adding 1% of these stocks to my portfolio. And right now it's below because none of them have shown super strength. And they all looked stretched. Have a strategy. Now you can see MRVL right here, $1.40, 1.46 billion in revenue last time, 1.8 billion in revenue this time, 43 cents per share earnings per share. And I'm sorry, they made 1.52 billion. This time earnings per share 0.59. Increased expectations. Same thing with AVGO. Increased expectations. And so that's where you're seeing some of this come down. Now, we have CrowdStrike tonight too. This one, reduced expectations. They reported 93 cents last time. They're expected 86 cents this time. Okay, revenue is slightly up. Zscaler is happening. You know, MongoDB is one that I watch. Costco in the core portfolio. Okay, you've still got big earnings and you've got stocks that will move. Kroger's, Macy, JD.com, Abercrombie and Fitch. I get yelled at for that. But again, you've got stocks that are moving up. Now, I am going to go over for the paid subscribers. I will do a separate podcast, a bonus podcast. It's been an hour, but you're not going to hear from me for the rest of the week. I will do a bonus podcast looking at how I would manage each of the stocks in the core portfolio. Now, the core portfolio is fantastic. You don't want to know why? Because year to date, you can see it right there. The core portfolio is up 2%. The S&P is down 0.16%. This is an equal weighted portfolio. It's 100 shares of each of these 34 positions. It's free to follow. You don't have to pay. It's right on Linktree. Again, everything is on Linktree. If you want the Trend Spider, it's there. If you want the Seeking Alpha Picks bundle, it's there. If you just want Seeking Alpha Premium, 30 days off and a free 7-day trial. If you want Alpha Picks, it's right there. You save $50. You want to join Webull like I have? I turned $1,000 into $13,000, which is now down around $9,000 because it's risky. You know, the Daily Spike, these are the paid subscribers when you subscribe to the paid newsletter. Okay, that's where you're going to get the bonus podcast. And I'm going to go over this entire portfolio of 34 positions, how I would be managing it today. And why is equal weight outperforming? Look at this. This is RSP. This is the S&P 500 equal weight versus VOO year to date. Okay, RSP is up 1.73. My core portfolio is up 2%. It's beating the S&P 500 even equal weight. And VOO is down 0.35%. So again, it is about making sure that you have a strategy. If you're losing, it's about making sure that you're comfortable losing. Because I believe that over the long term, the stock portfolio that I have will do fine. And if you don't feel that way, then you are not managing your portfolio effectively. You do not have the tools to manage your portfolio effectively. If you're not picking out stocks to buy right now, you have not set up your watch lists. It's about strategies and making sure that you have the strategy. So I will leave you with that. I am traveling tomorrow. You may get another podcast, probably not. But again, during this time, it's not about panic selling. It's not about making sure that you buy a ton or change direction. It's about managing expectations in a down market. We are in a down market. We are still in a bull market, but it's a down market. And so I do believe that it's short term. I do believe that long term, we end the year higher, even though some people have been reducing their expectations. I still believe we end the year higher than where we are today. There are too many good things in this economy. And I think that the tariffs that are going on, this is short term. And short term may lead to some bad short term, but I think a 10, 15% pullback is healthy. It resets those weekly charts, and it provides you an opportunity to buy the stocks that you wanted to get at a lower price. So make sure that you're managing to your, if you are in VOO and you panic sell VOO, there is nothing I am ever going to say that is going to do better than VOO. Okay. Long term, does it make sense to buy VOO right now? Well, if you asked me that, I would go literally to the 4-hour algorithm and I would say, wait. But I could be wrong. Time in the market beats timing the market. So all of a sudden you could see, all tariffs are off. We're lowering interest rates. Job market posts like record 200,000 new jobs on Friday. And unemployment doesn't go up. And then boom, all of a sudden we're back at 560 and you're yelling at me, you didn't tell me to buy at 536. It's because my strategy doesn't tell me to buy. That's it. My strategy is not your strategy. Make sure you have a strategy. And developing that isn't about me telling you what my strategy is. It's not about someone else telling you what a great strategy is. It's about doing the research and understanding. If you don't have a strategy, I would argue your best bet is to buy VOO and QQQ and just start adding to those and then add one stock. Figure out a stock that you like. It might be Apple. Go and investigate and understand how this chart moves. Understand what their PE is. Understand what are the catalysts the last times the stocks moved, okay, on a chart. Understand what your time frame is. Understand all the strategies that are involved. Maybe it's just the strategy that I pointed out earlier, where you buy it on a 30-minute and you risk 1% to make 3%. And it beats buy and hold. Maybe that's the strategy that you want. Maybe it's a strategy of, hey, I'm going to buy it when the PE is down below 30. And when it gets to 30, I'm going to sell it. Maybe the strategy is on this weekly where you see like it's trading in this range and providing, right at 200, it rejected off and then it blew through it. And so right now the support and resistance line might be 225. And you might have 250 in this one next week. And it's 237 right now. Again, strategies matter. Make sure you have one. That's it. Take care. I will see you later.
Every morning I wake up to the sound of the trading bell.